This is the Euro New Zealand and we're here on the 15-minute time frame, and we have a potential wedge pattern that's set up. Now we do want to be cautious with these wedge patterns. They don't actually appear that often in the market, and very often they can turn into a low or high and tight flags. So what we've done in this instance is gone a full ATR below the lows and just allowed for that. So don't be surprised if this trade goes 20, 25, even 30 pips into arrears. So let's look at this on the dailies. Well, we've been looking at this big AB equals CD pattern for a long time. Unfortunately, we never quite got our entry on it, and we've seen a very big rally now after that 3-bar reversal that we have. And just let me put in this 382. And so we had a lovely 3-bar reversal, and we've seen a big pop here to the upside. So we know that based on this pattern there's room to come up to targets at this 16800 psychological number. So let's go to the 240. Not a great deal here on the 240. We've got a nice move. We had a move higher, a pull back, and then a move higher. If we go and take a look at the 60, then you can see that after that very direct move, we started to consolidate sideways, and as we drop to the 15, this is where we can really look at that this potential wedge pattern. Now what I love about this is we obviously have a nice swing in the market, which is what we like to see, and the more directional the pole, the higher the probability that we're going to see a break to the upside, because look at all the buying pressure. And all this is, the actual flag itself, or the wedge pattern itself, is nothing more than just a breather before all this momentum carries on again. So this can be a couple of things. This could be a wedge looking like this. It could be a very tight one, and if so, then we've just had the structure hold and green candle right here. Very often though, these can turn into high and tight flags, so would not be surprised if price came up or down to form two touches on either side. So we've had to account for that. Now the great thing about this pattern is it has a very long pole, which means that we've got extended targets, which means the risk to reward is better. Although, because we've had to account for it being a low and tight flag, and just again guys, if you're entering this trade, do not be surprised if we come down here to hold it, okay? This is what can happen with these wedge patterns. So if I bring back on the orders, I've gone a full ATR below the low, so 14 pips below this low. It gets me about 20 pips below that 16700 psychological number. I'm also front running by a full 5 pips before that 127 target. So the risk is a little bit more than I'd like on this trade, or what it usually is on a trade this size. But again, with it being a wedge, we do have to account for it being a high and tight flag. Still 43 pips for 66. And we're back for the update on this trade. And what happened in the night is we did rally up and tap those targets, and we were taken out there for plus 65 pips. What a lovely trade in the end. This did turn out to be a wedge pattern. Didn't turn into a high and tight flag, and a lovely 65 pips to start the week.